be critical are the stocks on the editor's radar. So let's get cracking then. We've got Star Health and Paytm that we'll be discussing, both brokerage candidates. Let's begin with Paytm and talk about the latest note that's coming from Macquarie. They've downgraded the stock to the neutral rating and they've also slashed the target price. They've attributed it to the run-up in the share price and competition now from Jio Financial.
Let's first look at Paytm and Nifty. It's not a like-to-like comparison, but we're trying to establish that how unreal the outperformance in some of the consumer and fintech stocks is. Selective data, but we are looking at the year-to-date change in, let's say, the Nifty and the Paytm stock. Now that's yesterday's Paytm stock. Let's look at the year-to-date move here, and that will just come up, and there you go. Now, Paytm is up 57%, and Nifty this year is up 3%. 57%, 3%. So the rise in Paytm, I guess, has been
from those lows.
Bombed out levels, I completely agree. But the underperformance in Paytm, or the deep value which had come in Paytm, the contra buyers, I think they've really got what they wanted in terms of a comeback. Now for Paytm, there are two concerns here. I'm not even getting into business, but Jio, Reliance AGM. And ahead of Reliance AGM this time, it may not be green hydrogen, it may be about the new kid on the block which they would be listing somewhere in FY24, which is Reliance Financial Services. Markets are expecting Reliance or Mukesh Ambani to come out and make some grand announcements about how large they will scale up their financial services. Directly, indirectly, it's going to be a digital-based service which could have impact on Paytm and the entire fintech space per se. That is something which you need to be aware of. Second, bank investors are not done selling. Especially we know that Alibaba still left with 25% stake. Higher the stock price goes, the more chances of them selling. I think it's going to be something which could change the demand-supply dynamics. So the stock is no longer bombed out. The valuations are no longer all that attractive. Real concern which could come out of from Reliance AGM in terms of what the Reliance vision for financial services could be and the overhang of the stock. Net, I think it may not hurt you if you own Paytm to book some profits. And I think in the near term, the stock may just get jammed largely because some of the concerns I flagged off.
Okay, so those are the concerns, may not hurt to book profits in Paytm. Let's move right on to Star Health then. It's a positive brokerage note from CLSA. They've maintained a buy rating with a target price of 700. And Nikunj, they've listed out a number of drivers in their overall business that can aid this growth.
This entire space has gone through a rough and a tough patch, and that's largely because of the claims they had to give because of COVID. It's in the healthcare business, COVID claims, hospitalization were very high. As a result, they had to, this entire space, they had to go through what could be called as a tough period. For Star Health, they've understood that running the corporate business in India is going to be difficult, and they're looking at exiting that business. They are focusing on the retail business. They've got a lot of levers here. The banca and the semi-urban rural market, largely retail. That's work in progress, and that I think what market should recognize. For a minute, let's keep away the whole halo effect that at once upon a time Rakesh Jhunwala invested in it, and Rare still has a large chunky stake there. But if you look at the business independently, the stock has done nothing. This entire insurance space is making a comeback. This is one of the finest companies in the healthcare business, and valuations are looking attractive. I will not be surprised that from here next 6 months, a company like Star Health could actually start outperforming the market. Just like Paytm and fintech outperformed in the first half of this year, some of the insurance and some of the AMCs and some of the other allied companies may outperform in the second half of this year.
And here are some of the growth drivers according to CLSA. Okay, hope you took note of these stocks on the editor's radar, and it would be interesting.